Facebook beat earnings per share to $2.70 versus $2.56. They missed on revenue by 27 billion to 28 billion, nothing crazy. Daily active users, they beat 1.96 billion over 1.95 billion. Monthly active users, 2.94 billion, down from 2.97 billion expected. Overall, the market liked what they saw. Mark Zuckerberg also mentioned in the call, hey, we're going to slow down our investments on the metaverse. And that's when the stock really started pumping even higher after hours, because obviously the metaverse is it loses cash for Facebook, whereas ads in their core business gets them more and more revenue. Justin, let's start off with you. Facebook controls basically 3 billion people's attention every month. Is it wrong to write off this stock, and is it likely going to come back to being a $1 trillion company?
Yeah, I mean, I think the move after hours where Meta is, or let's actually pull up the chart, Meta or Facebook stock is up like 16%, just shows that the expectations up until now has been kind of like what Tom and I have expected as well, is like it is a right off the stock kind of story. They reported a pretty normal-ish quarter, right? Like EPS didn't beat like by that much. Revenue was a miss. Daily active users was actually a beat, which was, I think, the best part of the earnings. But I think it just reminded people, the earnings coming out, reminding people that the sky is not falling on the stock, means that it was beaten down way too hard on the way down. That being said, I don't think that our job is to hold a stock just because they could be undervalued if I don't believe in the story. So for now, I don't really believe in the metaverse story that much yet. So I'm not going to buy the stock, because until I buy into the story, I need the story and the valuation. So yes, it's cheap, but I need to get comfortable with the story.
Tom, would you buy Facebook?
Well, look, it's a complicated question, and I'll tell you my opinion about Facebook. The price right now, even though it had a 17% jump in pre-market last time I checked, it's still down significantly this year. I believe like 40%. We saw $320 just a few months ago, and I think in February. It's trading at a very nice little multiple of 4 times price to sales, which is very interesting. If you look at it like an accountant, like a straight up Warren Buffett level of analysis, they check all the right boxes as far as, operating income growing. Yes. They grew from 6 billion to almost 50 billion in 5 years. Revenue versus COGS, they scale very nicely. They always have 6x more revenue than COGS. It generates massive amount of cash flows, $30 billion cash flows. They have a lot of cash. They're net positive on cash versus debt. So everything, when you look at about assets to liabilities, the entire company structure as an accounting analysis is just pristine. They don't have any content creation expenses, obviously, right? It's user generated. They have no competition. But, and there's a big but here, like Martin Lawrence would say, the problem is that advertising, which drives their business without the metaverse, is insanely sensitive to economic crisis and recessions. And as we're heading into what seems to be an inevitable recession in the US, as well as Europe, as well as Asia, you're seeing what's going on in Europe right now with gas, with food, what's going on with China and rest of Asia and the US. So there's going to be inevitably a reduction in spending on advertising, which is going to hurt Facebook long term. So I'm kind of on the fence, but with these numbers, I'm really tempted to jump back in. Let's see.
Yeah, I mean, I don't think that their valuation is low enough that it tempts me yet, because they are in reinvestment mode. If they flipped and said, we're going to squeeze this thing for cash, then yeah, they are undervalued because they have a lot of barriers to entry, they control a lot of attention, et cetera, et cetera, et cetera. So it'll become like more of a dividend style stock. We don't actually know if we're ever going to see that cash, because they might plow most of that into building the metaverse. What is the metaverse? Mm-hmm. Is the metaverse ever going to pay off? We don't know. So,
look, you're right, but I'll tell you why I really trust what they're doing as far as growth. Looking at growth, you shouldn't obviously just look at revenues. If you go deeper into the stuff I talked about, and you look at how much their operating income grew over the past 5 years, how much the cash flow grew from 5 billion 6 years ago to 30 billion within 6 years. Their even if you neutralize goodwill, which we talked about from assets, they're 4 times assets left. So the business is generating a lot of money. They're very efficient. They're staying efficient. I think that the only problem isn't the lack of monetization for shareholders, because you can always monetize the stock even if it doesn't have dividend by trading it, obviously, right? It's the same value. I think the big risk would be how would they fare up in a recession time. That's my biggest fear.